All right. So now many of you have always asked, when I said, what does it take steps to get into trade and all of that? We have all know number one is that to get the directional bias, to know where the market is going to. That's to understand the market structure. And then if you get that, you want to now know where should I enter from. That's one of the key important things. Now, listen, if you have been trading and you do not have this idea, pay rap attention. If you have been trading and you do not have this idea, pay rap attention. It is not enough to know the direction of the market. It is important to know where should I enter the market from. And of course, you must define the type of trader you are. Okay, so maybe you are investing wet trading person, or you are a broad position trading trader, or you are involving in swing trade and all of that. But in whichever way, there are factors that you must look at. Now, so let's quickly go, and I'm going to take them one after the other, not detail in teaching. I'm going to teach them there one after the other later. Entry model. We all know that three segments of entry market is number one, reversal, number two, pullback and retest, number three, breakout. But in all this, what should you look out for? Number one, range, candle range. We call something CRT, candle range theory. Candle range theory and power of three, they are similar, but in a way, there's a way we use them differently, but they are very, very similar. So, but there's a way we use them differently. All right. So you want to see that, okay, a range, candle range. Number two, so candle range is similar to power of three. So not necessarily three candle, but market to accumulate, manipulate, and distribute. So you want to find a way around it. Number three, timing sweep. That sweep of liquidity on timing, maybe weekly. So when the candle, so on a weekly basis, so if the candle is going to maybe the market get to a point and that's the weekly high, and then when you sweep it fast and return back to the zone, then you want to find a way of taking a trade, daily, hourly, etc. Three, season sweep. That is, we have three major sessions in the market: Asia session, London session. There are other ones like talk about Sydney's, Frankfurt, and all of that. So, but nevertheless, but you are looking at three major sessions: Asia, London, and New York. Of course, extended of New York is NYC. That's New York Stock Exchange opening. So you want to look at sessions, right? Session high and low. When it's swept, you want to see, and that's the dimension two that will still take through this power of three. Now, MMM, that's money market maker model, right? Sell side, buy side liquidity. Okay. So this has to do with like it swings. And when the market get to a particular external liquidity, you sweep it, you return back to the other one. So market maker model. So you can find maybe just demand and supply zone. And then when it sweep the demand zone, you expect it to return back to come and hit down to supply or demand zone, and as it were, pari passu. FEG, this is very important. Fair value gap. Fair value gap is a three-way candles created that there's a space in between the third and the first one, and the second one is the middle that creates a gap between them. So where market is going, but if you do not have an education of the directional bias, you probably may not be able to fix your trade on that. Okay, so fair value gap. Now market structure shift. So you still determine that Fibonacci retracement level. So Fib levels are another levels of finding a trade, which I'm going to experiment to you. Other block. Engulfing. So instead in smart money, you call it changing state of delivery. Yeah. Then chart patterns. Maybe double top, right? Inverse head and shoulder, all of those things. All right. Double bottom. Then we have harmonic pattern, different patterns like that. Okay. Triangle, right? What do we call it? Different patterns as it were, all right? Okay, then you have the RSI MACD divergence. So divergence means the MACD RSI is showing overbought or has left the overbought already moving while the market is still selling. So you can see these are different areas to pay attention, and then let it be your mind. I'm going to teach them separately, but I just want to experiment in a trade for you to identify what I'm trying to explain now. Now, so let me use Bitcoin. as an example. Okay, so let me use Bitcoin chart for an example. So let's go there. Let's use Bitcoin chart for example. Just a moment, you need to push it up here. Yeah, so now this is a chart for Bitcoin, right? Now, so of course, when you are trading, you want to identify trend first. So I'm going to be very fast just to show you all these 12 things I mentioned in article. So it can come to my mind. When I see them, I just identify them, right? So first, but the one that is very important, I'm going to tell you fair value gap, right? FEG. And then the second one, so FEG can combine FEG. So let's look at it this way. So let's combine FEG, fib level, PO3 slash CRT, because you can quickly see all of these things. Engulfing, okay, yeah, timing, range, okay, and others. Okay, so let's go work with this one. So when you get a trend, so look at this. This is an uptrend. This is 1 hour. So let's use this 1 hour. This is an uptrend. Very simple. You have a high, you have a high, you have a low, right? This is a high. No, this is a high. Is it higher than this? So this is a high. This is a low. 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 And this is the last high. Now let's take it from this one. If you look at this now, when the market was moving here, so what do I look at ordinarily that the market could come back to come and pick for me to find an entry? Now there is a fair value gap here. Very broad one. It's a very broad FEG. So from here to here is a fair value gap. Okay? So now the market to travel back to it and you should be finding an entry. Now, most time when the market travel to it, that's when you are looking for, okay, so let me add this one, MSS or change of character. All right. So now you should be able to identify all this region. That's number one. So if you look at it here again, there is another fair value gap here. From here, look at it to this point. This is a fair value gap. Do you see that? Make sense? All right. So now, so the market move up as it were. So do we have any fair value gap here? Okay, not really. It's okay. Good. Now let's go. Now, do you just now determine that the fair value gap will come here and then the fair value gap is said the moment you just get there, you enter? Well, that may not be so. That may be so relatively. So what do I do? When the market was moving up here now, there's something you need to identify. The last high, which was here. All right, this is the last high, which was here. And the last low, look at here. So this is what we call trading range. Now, this is the last low and the last high. So the moment the market break the next high, this we call what? Break of structure, okay? Just pay attention. I want to simplify this thing. This become BOS, break of structure. All right, this become break of structure. So once there's a break of structure, okay? Once there's a break of structure, all right, you want to find where the market will come to. But now that there's a break of structure, you now have a new low. And where's that low? Where's that low? The low is here. because this one had been broken. It was when this one was here, this is a high, this is a low. When this one was broken, so you have a break of structure here. So when the market was going this way, you want to look for where to enter the market. So that's where you take your Fibonacci retracement, take from this low, always draw from the left to the right. So to this point. So what are you looking for? You are looking for a retracement 38, 50, 61. Now, when you get to 38, 50, 61, so sometimes people always say, if it's gold, 38 can be very fast. Now, but in Bitcoin, I think it always respects 50 and 61. You have to equally understand and study the kind of dimension they move and all of that. So here is this. When the market come here, you just have spot this one. So what do? I actually go and mark this 38 to 61. This is the place I want the market to return back to for me to be finding a buy. So it is when you come here, you are now going to be doing what we call MSS. So I'm not going to talk about that right now. Now, so let's go to the next one. Now that the market has moved away from here, you are bought, you are taking profit as your occasion serve you, 1:2 risk reward. We've talked about that. Now, this is the next high, and this is the new low. So I come back again, take my Fibonacci retracement level, and then draw from the bottom to the highest. But you make sure that the market is already returning before you do all of this. Okay, so here you go. Okay, so then the market again. Now, if you look at it, the market, apart from getting to 61, there are some things that can push the market below the 61 is called the fair value gap. Look at it here. So the market travel back to the fair value gap, then that is another point of interest. Now let's go back to this one. So the market now is up here. You still draw to see where will I enter from. That is to say, look at what you did. Let's go. Take out this Fibonacci and then start from this low to this high. Now taking it from this low to this high, the market actually came here, 61, and you bought. Now, as you bought, likelihood is going to happen that you get out of this market. Why? You entered from here, the market move, you're targeting that it should take profit here and beyond. But this time around, the market failed to rally. So we now have something like this. This is the lowest. So this is the current low. And this is the current high. So the market now came down. All this one are internal liquidity, came down and reverse. They become another high. It become a new high. All right. Since this one has become a new high, then you have a new low here. So we have a high, a low, and a high. So what happened? Now this market have changed, but it has not actually changed character because this is not here bearish because this is the low, the external liquidity that's supposed to be taken out. So here you come. The market moved from here to here and has created this. Do you get it now? So now that that has happened, yes, the market now moved down. Yeah, so here is you come, look at it. This is a high and a new low to see where the market will push back from. So market push back from here. That makes sense. And then we broke this. Have you seen that? We broke this. We broke this point. Now that we break this, this is a change of character or market structure shift. Now, this is a downtrend now. This is no longer an uptrend. This is a downtrend. On 1 hour time frame, this is a downtrend. So what do I want to do? This is a new swing low high and a new swing low. Now let's take it. I put from here now to this low. So what am I looking for? So I'm looking at the market here. So we are in a fair value gap, but we have multiple fair value gaps. We have one here. Are you seeing it now? Which is like the golden region. Then we have another fair value gap up here. So now you are waiting to see which one will be rejected. Now, how do I now come in? So I have to pay attention on this. How do I now come in? If the market will reverse from here or here. So if the market is going to reverse from here, when the market gets here and start rejecting, you are going to go to 5-minute time frame. So what I'm looking for in 5-minute time frame, this is a high and this is a low. This is a high, this is a low. So I want to have a change of character. So, but right now, the market is still within this region, and I need a kind of fast move up to that point for you to find a. So, in other words, let your 5-minute become bearish. It has to align with the 1 hour direction. Then you are looking for a sell. Is that gotten? Now, this is very, very important if you must achieve a very good goal. I've just shown you, so you can write those things down because I'm going to teach them separately, one after the other. I just summarize in the live trading for you to see. Okay, let's go here. Okay, so now all you need is you want to see the market to become bearish in 5 minutes, in 3 minutes, in 2 minutes, in 1 minute. The market need to become bearish. Until the market become bearish, you are not shorting anything. You get it? Right. So if you look at it here now, see we're getting there. This is a high. This is a low. This is not a high because this is higher than this. So this is a high and this is a low. 1 minute. So this is a high. This is a low. This is a high. This is a low. Then we have this now. It's a bit confusing, right? So sometimes can be very choppy. So, but I always wait patiently for a fast move because the market has to be very fast at those points for you to identify to be a kind of reversal want to happen. Remember, we still have this up here. So I'm just summarizing this. What do I look for in the market? So it's getting there. This is 50%. This is fair value gap. Okay. And that's one thing you need to know. So identify entry market is very important. I've told you CRT, pure, then CRT and pure CRT and pure of 3, pure 3. So I'm going to teach them separately, each for one, so that when you see them, you identify them so that you can trade. In fact, Bitcoin did that on daily time frame for this reversal that just happened. So let me show you the P of 3 on daily. That means you will have been in this market early. P of 3. See the first candle, see the second candle, see the third candle. The first candle move, if it's bearish one, move, and then new candle open, okay? And then move above it, exactly with a wick. That's like a sweep of liquidity, and then close below the high. That's one. That makes a lot of sense. Then the third candle. So in nutshell, if it's bearish, the middle candle should be taller than all of them in high, higher than the two candles. So the left and the right will be lower than the center. Then the third candle opens. So invariably, sometimes I measure it with Fibonacci retracement for me to find my entry. So you may not follow that dimension. So I follow the candle itself. So as I follow the candle, look at it. Where did it come to? I'm waiting for it at 50 and 60% golden ratio. So I mark it. So as the market open, so you can see this is the close because a bullish candle. As the market open, flip that, then that's your sell. And then you'll be targeting 1:2 risk reward, depending on what you're doing. So this is power of three: the accumulation, the manipulation, and the distribution. Now, power of three can happen in any candle, lower time frame, higher time frame, 1 hour, 1 minute, anyhow. I use it to trade gold very well. But will I just see it and trade? I need to open at a point of interest, right? So you need to happen at a point of interest, and then I will now be looking for my entry. Okay? So I think I even did that on gold. Power of three happens somewhere here. Look at it. This is manipulation. This is accumulation, manipulation, and distribution. After the distribution candle, your entry, your coining, right? Similar happen here. Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. Okay? So they will be obvious, and then you can now find a trade. What's going on here? Let's see. Okay, so this is just basic overview. So I'm going to put a teaching, proper teaching on each of them. But no matter what you set up, no matter what your strategy is, if you cannot identify area of interest, that's where to enter from, then it's a waste of time. Are you getting it? It's a waste of time. Okay, so you can see, okay, this is the Bitcoin. So go to 5 minutes. So go 1 minute. A high, a low, a high, a low, but not lower to this. So this is, so most time it's better you have a fair value gap. And then you are selling and putting your stop loss above and all of that. So it's just an overview, general. So I'm going to do a video of each of them for better clarification. Thank you.